All right. Welcome back, everyone. I'm Maddie, head of growth at Solana Labs, and this is another session for the Riptide Hackathon. Please register if you haven't done so already. But today we have two special guests, Tristan from Zeta Markets and Ayush from Katana. Um, these guys were actually hackathon participants in previous events, and each one actually won the grand prize for both Zeta and Katana. And so I'm really excited to chat with them today. And yeah, would be great to just start out with just an intro from each of you.
Yeah, awesome. I can jump in as Maddie already mentioned. Hey, I'm Tristan. We're building Zeta Markets, which is DeFi options and futures DEX built on Solana, and we've been going for almost a year now. Started in the Solana season hackathon, was it in like April last year? And we're fortunate enough to win that. We kind of really slogged it out, put in a lot of time and effort into that, built out an early version MVP of our platform, and have just been kind of building, iterating on the platform since then. Went to mainnet pretty much in early January, and have just been growing the platform ever since.
Yeah, I'm Ayush, founder of Katana. I also was previously in the Solana season hackathon, ran a project back then, and then decided to re-enroll also for the most recent Ignition hackathon. So Katana is essentially a yield generation protocol. So we run automated option strategies to generate yield. That's not tied to liquidity mining. So yeah, super excited to have the chat today.
Awesome. I guess you're both really interested in crypto at a high level. Why did you guys decide to build projects in this kind of like DeFi, decentralized finance space, and specifically like why derivatives?
Yeah, it's a really good question. I think there's just a massive opportunity given that the traditional finance ecosystem and market cap is just incredibly massive, and you're starting to see this really take off in crypto, especially DeFi. Now feels like a really legitimate use case for crypto, and you're seeing kind of volumes, I think, on centralized exchanges increasing massively. Like perps have found incredible product market fit. I think at the peak last year, perpetuals were doing like $2.4 trillion worth of volume, and you're seeing this kind of just like only growing, I think, over time. And for us, we realized this is like a massive market. If you look in traditional finance, especially, derivatives volume absolutely eclipses spot volume by like 30x or something ridiculous like that. We're not quite there yet in terms of DeFi, I would say. So a cool stat I think recently from Jump was that options volumes only make up like 2% of overall volume, whereas like you look at US equities and it's like 35x. So we definitely feel like we have a couple of orders of magnitude to grow, and that's why we kind of came into the space. We didn't see like a really viable DeFi derivatives platform out there, and really wanted to kind of like capture and I guess like bring that to market and have people trading in that space.
Yeah, some pretty similar considerations on my end as well. I think really what draws me to DeFi in particular is just sort of the hyper scalability of these protocols, where we're just sort of two people, five people, and the protocol doesn't really care if there's $10 million or 100 billion in the sort of contracts themselves. And I think that's really like the most interesting part to me in terms of driving further efficiency in capital markets, and also looking at sort of the hyper liquidity that exists where you can essentially trade anything, and sort of get a price on anything as well. So those were the two main draws to DeFi in particular. And then with regards to like derivatives, as Tristan said, it's sort of the next frontier, I think, in DeFi's development. Still a very nascent space, and I think you're seeing a lot of cool projects come out of there. So yeah, definitely a place that we like to be as well, is just sort of on the leading edge of what's happening, and that was sort of the attraction to derivatives specifically.
Yeah, and I'd tack on to Ayush's point as well. Like finance is such a big thing for people. Like everyone needs financial services, and the cool thing with DeFi is you basically got a bunch of people putting code out there that kind of provides this to like this global audience and anyone can tap into. And it's not like traditional finance where it's kind of these guarded communities and like all these trading firms working against one another, you're kind of taking a lot of the principles of like open source software and able to give these tools to people and have all these different composable projects and yeah, all these tools and services that people can use. So it's really exciting. I think you're muted, Maddie.
Yeah, no, I was just saying you guys spelled it out really clearly why DeFi is exciting. And yeah, I think you mentioned just at the end there, Tristan, like composability. And I know you guys recently had an announcement, right, where Katana is now composing and integrated with Zeta. So it would be great to hear from both of you kind of about what that integration is and why you're excited about it.
Yeah, I can kind of kick off very quickly, but Ayush can kind of take it away. I think it's something that's been in the works for a very long time. I met Ayush maybe, what was it, like 6 months ago? I don't know. In like, we did like the same hackathon and we've been talking for ages, I think, in terms of an integration and working together. And yeah, he kind of came to market very early with these kind of yield generation protocols. And there was not really much underlying infrastructure, I think, for it back in the day. Hence why he's kind of like, I think, took a bit of a break for a while and then came back once the ecosystem had matured. And then yeah, like most recently, we basically launched, I guess, kind of a exchange that would cater to a lot of these vault products like Ayush is building out, and we did, I think, our first expiry kind of last week. So migrated a bunch of vaults over, and then yeah, obviously going through another one kind of today, tonight, which is pretty exciting. So it's good to have like proper TVL now into those vaults, and like really exciting to partner with great protocols like Katana on this.
Pretty much that. And like I would add on, super excited to work with Zeta after, as you mentioned, a very long period of time. I think like for us, the sort of core considerations are, Zeta offers European cash settled options, and they built a special product for us called Zeta Flex, where we're able to select the strike and expiry, and they provide the settlement mechanism. One other layer there is like auctions now happen entirely on chain. Previously, some portion of it was off chain and flowed through escrow. Entirely on chain, everything's super transparent, and I would say like much more efficient. I actually spent a lot of my early morning running the auctions. It happens at a weird time, like Friday at 3 a.m. Eastern, just lining up with Deribit expiry. But yeah, I mean, I think like super excited about not only the current integration, but we have a lot of products in the works. Working very closely with Zeta, I think is important in terms of like being on the leading edge of DeFi option vaults, where today they all look the same, but I don't think that'll be the case like in the coming months, or if we continue to think about that, the exact same. But yeah, that's sort of what we're working on. And then yeah, open to like sort of any and all partnerships on the community side as well there.
Nice. And I think like you guys are both working on interesting kind of layers of the stack where Zeta is kind of at a somewhat of a lower level in terms of like providing infrastructure for apps like dApps like Katana, where you're trying to like make it super easy and simplified for the end user to kind of like get exposure through like a covered call strategy, for instance. Like I guess like a covered call is like a pretty common strategy, but do you think that you'll see kind of like a Robinhood like kind of explosion of retail users just entering into vaults like that in the future? Is this more catered to kind of like more traditional finance, Wall Street types that want to get more and more complex with the strategies over time? Or like, I guess, Ayush, how are you thinking about like what the next strategies will be and who will they cater to?
Yeah, I think you kind of hit the nail on the head in terms of like, the Rails, which is Zeta here, and then I think like the point of ingestion is supposed to be the Katana vaults, where we simply like sort of package up the underlying strats, but using Zeta's Rails. And the whole value add really of these products is number one, like simplification. So users don't actively manage their positions and get perpetual option exposure. What that means is essentially like, in sort of a normal strategy, you would roll over every week manually. In option vaults, you simply sort of sit in the vault for however long you want, and the vault automatically runs the optimized strat for you. Additionally, like there are a couple other key considerations, like when looking at how option vaults are set up today, like we bring our own liquidity with us. So we're partnered with, like the top 10 crypto option market makers in the space who provide, sort of bids on our assets, OTC, where we don't rely on organic liquidity. So we're able to offer assets where, there is no organic liquidity for, let's say, Ray call options, for example. And then lastly, I would say, like with regards to target market, it's very much, as you said, like number one, retail. I think simplification of these strategies is important, and it definitely is, a nice way to generate yield that's different from, the traditional like farm and dump a token. And then secondly, I think you can offer very different risk profiles that make it, more and more exciting to use some of these structured products. I think, one thing that we're still solving for is user experience. In my view, like that was Robinhood's big unlock, right? So simplification without obfuscation. I think you want to see all the requisite information to make the appropriate decision, but you don't necessarily need to understand covered calls at sort of the nitty gritty. Like you don't need to target a certain delta, do the strike selection yourself, but you want to have some input into maybe your risk preference as well as like, how you interact with the products. But I think that's what we're trying to solve for at the moment. With regards to additional strategies, plenty of ideas there. I think we're just going to operate with the principle, like, do what's most interesting to retail at the moment, and then really optimize what we currently have, which with the Zeta integration, we're pretty much there on the covered calls and cash secured puts. And I think like, it is pretty exciting for institutions to use this as well. And the last target market I would add is like DAOs and treasuries to that mix. And I genuinely think like a lot of the DeFi options market will come, or a lot of the option market in crypto will come in DeFi and sort of happen on chain because the assets are sort of already there, especially like the long. That's where I think our niche is. And then, hopefully one day I think like, we can compete with Deribit in terms of like total volume, with Zeta as like the rails there. But that's sort of like the vision.
Yeah, all really good points, and I totally agree. Like vaults are a really exciting use case for us, especially both from like a UX perspective as well as kind of like a exposure and like new product perspective. From like a UX perspective, obviously options are pretty hard to get your head around. There's like so many parameters, and there's quite a bit of knowledge I think that goes in, and that's why you see like people who trade them tend to be like pretty pro traders on like Wall Street. But yeah, you have seen this boom of like, say, like the kind of Robinhood market. We've been kind of looking into that and I guess figuring out how we can tap into that. And a lot of it was just building our exchange in a way that's like really user friendly. And I think that like doesn't simplify it to like a, super watered down perspective, but something that's like intuitive and easy to use. And even like we have a mobile kind of mobile optimized interface, which is like definitely takes like some small inspiration from Robinhood, I guess, trying to simplify down that experience for the end user. But what we've seen even with that, like I think a lot of like the kind of casual DeFi user base is still kind of in that mindset of putting your money into kind of Uniswap type vaults and expecting some kind of like APY from that. So that's been people's mentality, and I think people are just like very accustomed to those kind of products. So that's where I think vaults kind of cater to that kind of market. I think people who are just don't want to do like strike selection and think about all like the kind of nitty gritty details of options. It's a really nice way to be like, hey, I can be exposed to these like pretty sophisticated financial products, but I don't have to go through like the cognitive overhead of figuring out how to like price options and then figuring out which kind of strikes and expiries to buy. That's kind of already handled by like a protocol that's done a bit of science under the hood to give you kind of like the most optimized outcomes there. And yeah, I'm just like really keen to see the kind of use cases and who ends up using, I think, a lot of these strategies. Ones like covered calls, I think like Ayush mentioned for treasuries, I think that's just like such an awesome untapped market. It's like you're sitting on these like massive bags of treasury tokens. You want to somewhat like monetize that now, I think. And you kind of forfeit, I guess, some of your like really high kind of upside exposure, I guess, when you're kind of coin ends up like ripping upwards, you're kind of pretty happy anyway. I think that your entire treasury is just appreciated so much, and so you kind of like almost trade off, I guess, some of that like really extreme upside for kind of like cash in hand now, which I think is just like a great sell for treasuries, because that's what you kind of end up paying your developers with, and that's kind of what you use to kind of, I think, hedge out some of your risks. So it's really nice to be able to like customize your risk profiles, rather than always just being like one-to-one, like I'm holding spot and it's just like either it goes down and I'm not having a good time, or it goes up and everything's great.
Yeah, for sure. That seems like a pretty no-brainer like strategy for a lot of these like treasuries for DAOs. I mean, has anyone even integrated with like a lending, like just a basic borrow lend protocol to like lend out and get some API that way? Are you guys aware of any DAOs that even Ethereum? Have you guys seen that actually in practice?
I think people use Yearn's like earn product in some treasuries, so they're just lending optimizers, swapping between Aave Compound, whoever else. I have seen like manual management of DAOs, and there's sort of the question as like how decentralized is that, or is it a guy managing the funds like Sifu? But yeah, like for us, like the sort of consideration would be like B to DAO or DAO to DAO almost, where we're sort of pitching a full decentralized like governance forum, and then the intention is like the people on the multi-sig who control the treasury, then sort of implement based on sort of the community's vote. But I think that's like kind of skating to where the puck's going to be in terms of where Solana is today. Like not a ton of DAOs. We do service Invictus DAO, so we run covered calls on sort of their treasury assets, but it's not INJ, or sorry, it's not like Invictus's like in token, but it's like sort of their like sole MSOL, and so they're in our vaults. But hopefully in the future, I think we'll expand that business line where it's sort of truly like Solana native, like all the Solana native projects we run native covered calls on, where like to the extent that there is decent pricing, which is like the other limitation there.
Yeah, I think it'd be super cool to have this actual like decentralized kind of treasury management, because I think, yeah, mostly how it is now. I think you're starting to see it pop up a little bit more on Ethereum, but most of it is like you go to a hedge fund or kind of market making firm, and they go and do some kind of clever trading in the background, like either lending it out or doing stuff like a basis trade and earning you, I don't know, 15 to 25% kind of yield on that, and you kind of trust them, I guess, with your assets. So there's some process of vetting, and I guess hoping that they do the good job that they do. Whereas if you can just plug into like a reputable DeFi protocol and it does that on your behalf, I think that's super cool. And then you'd have the DAO treasury kind of vote on it, and yeah, pretty exciting.
Awesome. Speaking of DAOs, what are your guys' thoughts on creating a DAO for your each individual projects? I'm curious to kind of get your thoughts on how you guys are thinking through that, when to kind of get more community control over the underlying protocol, and like what the timing for that, and what your thoughts are.
It's a really good question. I think from our perspective, we're super keen to go down the DAO path. Like it feels like the right way to involve the community. I think be community driven, like rather than I think just have like a smaller group of kind of core contributors. You start opening it up to, I think, like literally the untapped like thousands, tens of thousands of people that are in the community. There are definitely, I think it's a double-edged sword where there are some drawbacks of like speed versus decentralization. Kind of like the more distributed you are as a team, like the harder it becomes to kind of coordinate, reach consensus, and kind of like just genuinely like ship product. For us, that's like especially I think a big consideration, given it is like an extremely technical and sophisticated product that I think requires quite a lot of fundamental knowledge about just like general programming, smart contract programming, and then also just like options and derivatives knowledge on how to like do a margining system, how to make it under collateralized, how to interface with like Serum and Solana. So there's just like lots of components. So we're kind of like actively working towards that, and now we're kind of in a nice middle ground where we're I think very active on our Discord. We're engaging a lot of like community contributors. We're putting out a lot of bounties, so like a lot more of our features are now starting to be community driven, and we're having people kind of build clients and kind of new features and kind of tooling around our platform from the community, which also just scales our resources within the team quite a lot. But yeah, that's definitely like the long-term goal is like decentralize as much as possible, have it owned by the community, and yeah.
Yeah, very much similar line of thinking there. On our end, like we've always been a community-driven project, especially with, in terms of features, UI, UX, like how people interact with the application. I think like a lot of, my thinking there and what I've seen work best, as Tristan mentioned, like you don't want to sort of prematurely go to DAO where you do introduce the operational overhead of governance. And I think while you're iterating to product market fit, it's great to, have like a small team that, is implementing, as opposed to kind of going through like the governance steps, where I think it's easy to get in that scenario. So for us, like the ideal end state of this protocol is a fully automated, decentralized protocol where there are people building on top of us, whether it's protocols or individuals, and others contributing to the base layer of the protocol. In terms of mechanism design as well, like how we design the incentives, I think there's like some very interesting schemes that can incentivize other builders to contribute strategies to the base layer itself and earn for doing so. So Yearn is a good example here, and then also looking at insurance, how people think about, truly decentralizing the front end, I think has become more top of mind when you look at sort of the regulatory climate as well. So a lot of ideas there. And then with regards to timeline, I think it's more of a qualitative decision as to like when we feel we have, some degree of product market fit. And that's when we kind of hit the lever on, you know, fully decentralizing, introducing governance, and then throwing up grant programs and getting contributors today. And we view ourselves as just one, contributor to the larger, sort of Katana protocol. So separation of concerns there, where we're not the protocol ourselves, but rather just write the code here that is like bootstrapping the protocol, and then ideally, in the future, it's sort of a coalition of different strategists and different developers in the space.
Yeah, when do you foresee the ability for anyone to kind of like create their own strategy using both of your protocols? Like is that on the roadmap, and do you think that's going to be like the biggest unlock? Because there's only so many strategies that, your core team can come up with, but if you open up the platform to allow anyone to create their own type of vaults and try to get users into their vault, like I guess what do you think of that concept?
Yeah, I
Yeah,
like it a
good.
lot. Yeah, sorry, like just like permissionless vault creation. Just to draw the analogy, like permissionless pool creation. That's like a truly decentralized state of a protocol, where we don't want to be here like prescribing certain risk preferences and certain ways to execute the given strategy. So in the interim, we're already going to expose some more levers in terms of how you use, but there's like sort of that entirely permissionless component as well, where anyone could come in, throw up their own strat, and really like yeah, I think Zeta today is a fully like flexible product where theoretically you can kind of curate whatever strategy you want, whether it's individually, manually, or through a vault as well. But yeah, I'll kind of let Tristan speak to that better.
Yeah, so we have two products, one being Zeta Dex, which is like the CRM-based like order book options and futures exchange. And that one, by its nature, we kind of have to restrict, I guess, the markets that we list just to like concentrate liquidity, and also like keep it standardized. Like if you list every expiry under the sun, you would just have like infinite markets essentially that would never be able to be market made. So we kind of stick with those kind of standardized parameters. These aren't actually decided by us like you see in some other like somewhat not so decentralized protocols where it's kind of picked ahead of time, or that's at least what like Deribit and stuff would do. But ours are like auto generated based on like the spot price every week, and we kind of have this set of strikes that are like auto generated by the smart contract, and so that's kind of the new markets that will go out for kind of that week. We are pretty like hands off with that, and that just kind of rolls over every week permissionlessly as it's cranked. But we have to kind of keep standardized expiries and strikes there. But in terms of Zeta Flex, which is our other product, which is like the more vault centric product, yeah, that's like completely customizable, permissionless. We have like no opinions there, and we basically just give it to vault protocols and like literally anyone out there, like the Katana team, and they can go ahead and kind of mint any kinds of options, run any kind of auctions that they want. We kind of take no opinions there. It's like fully customizable and permissionless.
Awesome. Um, I guess one question for you guys. Like, it seems that like the narrative around DeFi has been somewhat subdued compared to like in 2020, right? When, or even in like 2019, when kind of the first DeFi wave happened and a lot of it, and there was a lot of excitement around a lot of those core financial primitives, and it was kind of actually considered kind of like the main viewed as like kind of where crypto had product market fit at the time. And I think over the last couple years since then, seems like DeFi has not really like the narrative taken off compared to things like NFTs and other verticals. And do you think that the DeFi narrative will come back this year? Will the market kind of shift again? Just kind of want to get your thoughts on just like broadly why you think the DeFi narrative has been somewhat subdued in crypto recently.
It's a good question, and I think like DeFi is honestly going to be like the slow burn kind of use case. It's something that I feel like is pretty ubiquitous, and it's not like just going to disappear out of nowhere. Like everyone needs like financial services, like they're a pretty important thing, but I guess they're definitely a lot less sexy than like NFTs and like gaming, which have popped up more recently. And I feel like that's kind of more a sector that appeals to the new wave of crypto that we've kind of and users that we've seen come through in like the last year. NFT is obviously kind of like blowing up. It I think has a very low barrier to entry. People can kind of get in. It's very easy to understand. Understanding like NFTs and artwork is definitely like a lot more intuitive than understanding like Black-Scholes and like options pricing. Like that stuff is pretty complicated and probably scares a lot of people away. So I'm kind of hopeful that like it's not going to be like necessarily cannibalistic. I think this stuff is pretty synergistic in that I remember we were building on Solana before like the whole NFT boom and before like DJ Apes, and TVL was definitely getting up there, but then suddenly you just had this like cascade of people who got in and started using it. And then I guess my hope in the long term is people come in for the chain and then they kind of stay for all the other kind of applications that are out there. Like you're not going to be gaming 24/7. You're probably going to be gaming. You're going to have these assets. You're going to like maybe liquidate them. What do you do with it? You probably like lend it out on some kind of borrow lend, or put it in a Katana vault and start like earning premiums on that.
I think I have a lot of thoughts there as well. Like a lot of similar things to what Tristan said. I think the narrative initially with DeFi was like clear proven use case, hyper scalable, hyper liquidity, clear efficiency that's driven by these sort of code that operates on a blockchain in a permissionless manner. I think a lot of the 0 to 1 innovations have kind of slowed down, right? So initially you had the AMM, you had the perps, those are new things. Everlastings are cool, but how many people use them? I think like now you're looking at narrative, right? And that was sort of spearheaded. ETH gas fees are high, so people are looking for things that they can use. And what you've seen there is just they kind of summer 2019 of ETH, but on every single other chain. So it's been a lot of sideways progress, I would say. Like everyone goes and builds the money market on Solana, or they go and build the money market on Near or Cosmos, right? And like slowly more builders are sort of just building the foundational blocks in different ecosystems. I don't think it's necessarily a bad thing. And conceptually, like those things are important in every financial ecosystem. There are some big unlocks, right? So you see Serum, for example, like properly scale out a central limit order book on chain. And I think right now a lot of the actual like frontier, I would say, is like in derivatives, which is very like interesting and a good place to be, in my opinion. But when looking at the sort of narrative with NFTs and gaming, I think it's, as Tristan said, much more relatable product, and you're just adding some financial aspect, right? Like art is a thing, gaming is a thing. Now there's sort of like something that happens on chain, so I set up a wallet, right? And I view it as like a great Trojan to the ecosystem. I think Solana's done a great job through Metaplex and as well. Just get people set up with the Phantom, and hopefully that's not the end of their crypto journey. I think like there's also the sort of like the greatest casino in the world is kind of crypto, and people just are playing around with things. But I think slowly like everyone knows about NFTs now, which I think is cool. Some people know about DeFi, and I think as people learn about crypto, DeFi will be there for sure. I think it's just like less novel thing now, so people have somewhat gotten used to it. And then the other thing is like the UX sucks, and like that's sort of on us to enable retail to really use this stuff. where like anyone can sort of buy art and look at it. I think not anyone can come onto Uniswap and start swapping assets or providing liquidity, right? Or come onto, well, definitely can't do it on Uniswap because it's expensive. But if they were coming on Solana, it's still like there are a lot of sort of challenges and things that we can do as protocols to enable easier sort of initial like use. So that's kind of where Katana's focused as well. I think it's just like simplification and catering to retail. But hopefully the narrative does change, right? Shifts back a little bit towards DeFi, or it all grows together. But I think everything is moving in the same direction.
Yeah, I mean, I think you're completely right that like NFTs and games have been such a great entry point for a lot of crypto newbies, and it's just about getting them to be comfortable, holding their keys, and that will lead them down the path to maybe using DeFi protocols later on for like financial services reasons. And I'm curious though, like, have you guys given much thought into like incorporating NFTs into kind of like derivative products? I know I was reading the other day, I think this researcher at Paradigm, Dave White, had a paper about floor per for NFTs. Have you guys kind of gone down that rabbit hole yet about more advanced financial primitives around NFTs?
There's actually kind of what I wouldn't say it was NFTs necessarily, but this is what Bartos kind of pushed us towards building in the early days when we first started. We started and we're like, hey, we're going to build vanilla options, and he's like, there's already a team doing that. Do like exotic options or do this kind of like funky stuff on like options on the weather or something or other, or these kind of crazy things. And the cool thing with our framework is anything that has an Oracle price, you can pretty much list an Oracle on it if you're somewhat able to price it, I guess. And so yeah, like I think if there was like a reliable Oracle, I know kind of Pith potentially or some others, I think are looking at maybe doing like an NFT kind of floor Oracle stuff like that. I'm sure maybe like Switchboard and others are going to look into this kind of more long-tailed stuff. And then yeah, I think if there was sufficient demand, it's definitely something we could list. The pricing might be a little bit tricky because it probably doesn't follow Black-Scholes kind of log normal distributions or all these kind of assumptions, but yeah, it's something interesting worth exploring. And I definitely read through that Dave white paper. I know some people I see on Twitter have been having a crack on it, so I probably need to dig in more and see what the progress has been.
Yeah. On my end, view it as like a very interesting space. It's still niche, right? Like it's not everyone with NFTs is trying to, lend against them. And I think like it's very bespoke in traditional finance, right? Like it's not you go to like your art money market and suddenly like there's a full market for it. So it's definitely a new thing. And I think, there are problems remaining to be solved, right? How do you properly price illiquid assets? That are not fungible, right? They're all slightly different. And then there's a lot of trust introduced there, even fractionalization. There's a lot of like, problems to be solved still. Like people have it, but I think like some people that are, looking at it pretty closely, like Bridge Split, I think on Solana is an interesting one. Definitely like uniquely focused on NFT/DeFi, and how do they work together. For me, like I think definitely interested. Again, we're a community driven project. If that's of interest to people, like we would, pursue it. But I think that still very nascent in terms of Oracle risk is a huge thing in DeFi as well. And when you think about price manipulation, if I hold 400 monkeys, I can change the price a lot. And how does that impact financialization of those products? Like, there is a lot of risk. It's easier said than done for sure. And when I think about like how DeFi/like NFTs progresses, I see a lot of like use cases of NFTs as a broader standard, not the profile pics, but just like a broader standard in DeFi itself. And then also I think it's a great community tool. So you see the hedgies, you see like the everyone's launching their little like DeFi native NFT project as well. And I think that's cool. Like definitely keen to explore that pathway, but maybe do something novel. Like instead of just having it sit as art, maybe it does have some intrinsic value in the protocol itself, and does like enable unique experiences or some unique unlocks as well, just by nature of holding them. But yeah, I think cool design space overall is sort of the TLDR in mind.
Yeah, I
What do
think
you
you
think?
touched on an interesting thing as well, which is like NFTs are like super illiquid, right? And if you're trying to like exit out of them, it can sometimes be really tough. You're always going through these kind of auction interfaces, which almost starts paralleling like some of this option stuff we're doing through like RFQs, where you don't have like an order book and like a liquid kind of fungible token exchange. And then you get like perps on the other hand, which is just these like hyper liquid products of like that do billions of dollars of volume on like centralized and even some decentralized exchanges now. So it'd be really cool, I think, if people start listing that, might come up with some really interesting market dynamics. Maybe people get like NFT index products. You start having like options on like, you know, the whole NFT index or on some other kind of types of products. And I think this is nice because it probably breaks down the barrier to entry for some of like these bigger tier kind of NFT projects, say like CryptoPunks or Solana Monkey Business suddenly trading at, you know, these pretty unattainable prices, I think, for kind of newcomers to the market. Like I wouldn't necessarily be able to buy like a CryptoPunk outright, but if I was to be able to buy an option or a perpetual on that, you know, it's kind of almost fractionalized in the sense where you'd have some kind of limited exposure to it, but I wouldn't have to fork out some like ridiculous amount of money. And then there's probably other crazy stuff, you know, like lending against crypto assets using like, against like NFTs, using NFTs as like collateral and stuff like that. That would be pretty wild.
A lot of green fields. And I think there was some just really good hackathon project ideas in there, Tristan. So I'm curious though, from both your perspectives, like hackathon is about, I guess there's about a month left before project submissions. What do you guys want to see coming out of this? Like, what would be most impactful for you know the Solana ecosystem in your opinion, and also for your individual product?
Yeah, I can kind of go first. So obviously I'm gonna shield derivatives a little bit because I'm very excited in this industry. I think there's just like so many things to build, and it's the first time we've like properly had, I think, good rails, like Ayush mentions, to like finally build on. And I kind of always liken it to like early days of the internet. We've kind of like built, I think, the fundamental protocols like your TCP and HTTP, where it's like you can now kind of mint and sell options, and we've kind of standardized that. And I think you don't have to reinvent the wheel anymore. And so it's now about building these applications, building vaults like Katana, and kind of getting more creative with that. There are definitely so many ideas. Currently, vaults are just limited to so far like covered call and put selling vaults, but there's just really like an infinite amount of possibilities out there. So that's really exciting. I think there's a lot of stuff there. Options, I think, as well, their kind of use case is a lot for like hedging and kind of insurance mechanisms. So if people kind of find nice ways to, I think, integrate that into existing protocols, like doing impermanent loss hedging on like Orca, say, would be really nice. Or say you go long on kind of a Mango per position, being able to buy put options to kind of cover your downside and lock in profit there. Stuff like that would be really neat. And then outside of the derivatives stuff, I'm really personally excited, I think, for the Solana Pay stuff that came out recently. I think it's just like such a cool product. I think it just like unlocks so many opportunities, and that feels like a big kind of opening of the floodgates to get a bunch of people in there. Because currently, I think on ramps and just like getting your money into cryptos kind of tends to be a pain in the ass. But once it's kind of in there, you've got this awesome ecosystem, and it's like very liquid, and you can kind of move all your assets around. It's like super smooth.
Yeah, I think on my end, like pretty similar things, to be honest. Well, firstly, I think like the coolest thing to see is how many people are building now on Solana. You know, in my first hackathon, like with Tristan, in May, like it was like probably 30 teams, and like two were on mainnet. It was pretty like, you know, early stages. Like the building experience was terrible, or like, you know, pretty close to that. And I think now it's just like, you know, not that much later, but the ecosystem has grown so much. I think the quality of talent has also grown so much. And then looking at like, you know, the projects, or, you know, what I'm most interested in, like, I was also working on a sort of crypto fintech product in the interim between like sort of the last hackathon and the most recent one for me. And it incorporated like some portion of Solana Pay as well. So that's pretty close to like, you know, my interests. I think fintech front end, DeFi back end is a nice concept. And, you know, there are a lot of things to be solved for when you look at customer service, which is non-existent in DeFi. When you look at, you know, non-custodial or custodial software, and offering like, you know, seamless on-ramps, like those types of things are very interesting to me. And I think Solana Pay is pretty new, so definitely worth exploring through the hackathon. And then more so just like, yeah, more builders have a reason to build in the space, meet friends, and join projects maybe after as well. So I think honestly excited for it all. And I also like not to throw shade. I like the gaming stuff as well. I love the NFT stuff. Just my interest is more so DeFi. Yeah.
Yeah, I think the Solana Pay thing is interesting. If like one of the things I've been thinking about is like if you can convince a lot of like merchants and medium-sized businesses to and even larger businesses to accept like USDC itself, and there a lot of companies actually have pretty large like cash balances, right? Like just like you were kind of mentioning with DAOs, right? There's so many like businesses that have all this cash, it's just sitting there. They're not gonna like utilize it on like, they're not gonna invest in stocks or because it's like really hard to move that money around. But if it's already in USDC, it's already crypto native, like things like vaults maybe make a lot of sense for some like businesses to hold their cash in for whatever reason to earn a yield. So I think yeah, we're just way underestimating kind of like the potential of all of this DeFi stuff for just even like regular businesses, beyond just like retail users. So yeah, should be pretty exciting if there's some adoption there. So yeah,
It's definitely
guys.
taking this like a huge amount of like static capital that's kind of out there that doesn't really do anything at the moment, and you're kind of using the power of software to go out there and, and make it kind of work for you overnight, which is kind of cool.
Yeah, absolutely. Cool. I think that's all the time we have today. But thanks so much for jumping on. Yeah, and yeah, good luck to all the hackers, and good luck to your guys' projects as they evolve. So, thanks for joining.
Yeah. Thanks a lot. Good luck to the hackers, and thanks for having us on.
Yeah.
Yeah, thanks for having me, and yeah, super excited for the project. So yeah, keen to judge this.